My name is Jim Kaplan. I'm founder of AuditNet, and with us today is my colleague and friend Rich Lanza, an audit software expert and data magician. This webinar represents a collaboration between AuditNet and auditsoftware.net in delivering training series focusing on audit software. We're glad you could join us today. I'll be moderating today's webinar. A little bit about myself. For those of you who don't know me, I'm the founder of AuditNet, with a background as a chief audit executive, Internet for Auditors pioneer, and an auditor who believes and promotes the use of technology for audit. The next slide provides information about AuditNet. Before we proceed to today's material and introducing our presenter, Rich Lanza, I'd like to go through a few important housekeeping items. The webinar is being recorded, and these slides were sent out to you this morning, so I'm not going to read directly from them, but just note that we are recording today's webinar, and you will receive a link to that recording tomorrow. By tomorrow, if we can get that uploaded. And we are operating under NASBA rules, so NASBA rules do require us to ask polling questions during the webinar, and you will receive CPE for if you answer all of the polling questions. If you're joining us today from a tablet device, you may not be able to respond to the questions, in which case just accumulate your answers and we will record them for you. We will be sending out the CPE certificates and links to the recording, and they will be sent to the email address that you registered with in GoToWebinar. You can submit questions during the webinar via the chat box on your screen. We'll monitor those questions and moderate them and also answer them, usually at the point where we break for polling questions. After the webinar is over, you will have an opportunity to provide feedback. Please complete the questionnaire to help us continuously improve our webinars. The next slide provides information about disclaimers. I'm not going to read that slide. Again, that was sent out to you this morning. At this point, I'd like to turn the floor over to Rich Lanza to introduce himself, give you a little bit of his background, and get into today's topic of leveraging Excel-based analytics in your audit and SOX testing of GL journal entries, case study approach. Rich?
Thanks a lot, Jim, and thanks again, everyone, for coming today. In looking at all of the different types of topics that I talk about, I like the general ledger the best because it really is the lifeblood of companies, and we are able to see accounts payable, revenue, all types of other odd activity that we should be auditing as well. And in my I would say over 20 years, I've done a lot of accounts payable, but soon thereafter I started with general ledger and have done that for many years as well, because it just seems to be this repetitive thing that companies should be doing more and more. And in going to the data files, one of the things that we talked about was handouts. Data files should have been sent to you, and if not, and you want to play along today with the data files, you can go out to that link on the slide or in your handouts. And just note, you might have to click on the link twice, because sometimes if everybody clicks on it at once, it sometimes makes the server a little cranky. So just note, you may have to refresh, but it should work. And it comes with an index Word document, which I'll attempt to get to here. Hold on one second. And excuse me, the index Word document does provide you an analysis of, a summary of the various different tables. The main table that I use is this general ledger sample table. So if you want to open up that file, that's what we're going to use for the most part initially. Technically, I think we use this one first, and I open it up quickly. But the other file is what we're going to mainly use. So that's the files. And again, Jim noted about the videos and how it comes in a day versus or so. As to the agenda, I wanted to talk about how all the different tests that we can run are very useful. But I think trying to think about the audit program and some of the objectives of what you're trying to get at is also key. And I can't get away from fraud detection when I'm talking about general ledger. And it seems to be like manual journal entries and checking for management override. That's kind of the main impetus for general ledger reviews when I get into it, and so hence fraud is key. I'm going to talk about ratio testing and financial statement testing. There's a lot of different visualization reviews that of course we'll do to try to understand the data, and I will attempt of giving you like an approach that you could take with data general ledger data, no matter how you have it, I mean, your data might be a little bit different or have different account structures or something, but for the regardless, you should be able to kind of summarize it these ways and learn something. That's what I like about it. It's kind of ubiquitous in approach. As to it ending on, I want to talk about then scoring, because a lot of times people fall down the trap of running 20 proactive error and fraud tests, as noted in the beginning here, and then realize it's very difficult to get around the false positives. And that's where scoring can kind of come in and really help there. So I wanted to just dive into it and get through some of the initial slides, if you will, of just understanding, what are we trying to look for here, and what are some of the key mantras of general ledger analytic auditing as a starting point. And sorry about this slide looking a little bit funky here, but I will explain it, and you should be able to see it. The normalize and testing the general ledger consistently across all locations. What I find interesting is most internal audit shops, if you are an internal auditor, or if you're an external auditor especially, you get the data given to the external auditors, and a lot of times internal audit is involved in that, or at least talks to IT about it at some point. So, it's a great thing to get the data if it's available, so you may as well kind of grab it while it's there. And that tends to come quarterly, because that's what they have to do generally for SAS 99. It may even be twice a year or once a year, but still, I mean, it's coming, and you might as well get it. Once you get it for all locations, you can really put it together and understand the lifeblood of the organization. I mean, you really can get into, I've done some analysis of manual journal entries to understand where there are departments that may be having many journal entries being posted for the number of people, and vice versa, where there are very few entries for the number of people, and why do we have so many people? But it helps you to understand that process flow. It helps you to understand fraud, and even just just kind of changes in the organization over time. Identifying savings, better ideas, and fraud. I like to think about the savings. I mean, I think we all talk about fraud, which is sort of this next slide, and we would be focusing on kind of that top right section, normally financial statement fraud. But I think even with the general ledger, you can start to get into asset misappropriation, fraudulent disbursements, and inventory frauds and such, because the general ledger tends to have a lot of the details. Many companies don't post in detail, and then that can lead to some issues. But generally, I know just one system in particular, JDE, does track a lot of the vendor and invoice information right in the record of the general ledger, so that you can just kind of pull that out and use it as if it was like an AP record. In a way, you could kind of summarize on it and use it. So you can almost build various tables once you understand the GL. In SAP, there's a table, BSEG, B-S-E-G. It's one of these kind of massive tables. But once you can get access to it, it has everything about the company, and it's in this like normalized, way. So there's a lot of value to the GL as a lifeblood and looking for value, but I wanted to even show in the fraud, I think we tend to focus on financial statement fraud, and I really want to broaden your mind to hopefully think about how you can get into these other areas. So, what do we tend to do when we're running reports? For the most part, we're building a surveillance system. We're trying to build almost like if you can imagine, a video monitoring system, within some sort of a warehouse. This is similar. It's sort of your data warehouse, and you now have analytics instead of video cameras. But you're monitoring the behavior of people, of things over time, of vendors, various different account sequences, and by department, and all these different things. And I think it's this surveillance concept, though. I think it's kind of doing it in more of a monthly or quarterly fashion, so that you can start to get more vision into your business and understand more when things change. And what we'll talk about, like textual analytics, is one thing that I think you can really find change quickly. If you stay on it, it's something where in a month you could really see a massive change and say, we should go look at those journal entries, because that's a brand new set of journal entries we've never seen before. And I think that that's something that should be considered. So in looking at why are we doing this, I think most of it, even the work that I do, tends to kind of go back to the COSO study done on financial statement fraud. There was one done, I believe, in like 1987, and then this other one was kind of an update in 97. And for the most part, the CEO or CFO had 90% involvement in fraud cases, which was up. And I find that for the most common ones from this as well was capitalization of expenses of assets and revenue fraud, and that was 60%. So revenue fraud is an area that if you're coding data, I'm just going to go back one in looking at here. It really makes sense to code revenue, and that's why I kind of put it in red there to say to you that is an area of focus, and you might want to pull out like all the revenue-related journal entries and just look at that on its own, like do an analysis of that. Because if 60% of fraud is there, you should at least know what's going through that, from a high level or over time or something. So again, that's what we're going to talk about today. If you're trying to sell this to management, like why should we look at the GL? The external auditors always do this work. Why do we need to do this work internally? There is something in, I believe, various standards that kind of look for management override, and where external auditors are looking for internal auditors and management mostly to take responsibility. And in management override, one of the things that they'll do is run a manual journal entry test to kind of test for management override. Because there is no real control on that, so you have to kind of run surveillance. It's collusion, it tends to be, and it sort of overrides. So it's difficult to find. So it's something where, I find that this is where they use analytics as kind of a way of controlling it, or I will say, to say at least, we did something. And then the external auditors do their work too, but I'm a big believer in doing it internally. The reason why is you can cut your losses down from a surveillance monitoring point of view, per the studies, down by a third in value, I believe a third in value, and half in time. So it's going down from 18 months down to 9 months, and that's the difference between a tip and a surveillance, so that does, the difference between those two. So a tip is where most fraud is found, so if you think about it, and if you're waiting for by accident or, notified by law enforcement, you're far too late. So there is business value to taking a look at this information and trying your best to find as much as you can on a monthly basis, kind of get those video cameras going and get going. So one thing that you might want to start out from a video camera point of view are your financial statement indicators. And just give me 1 second here. So one of the files that I've sent you is a matrix of indicators, and it's a pretty, it's hard to read here, so I'm just going to kind of scroll into it. Whoops. Okay, sorry about that. Excuse me 1 second. Okay, so in looking at this, what I've done is I've aligned for each of the different types of fraud types, the different types of ratios and indicators that might go up or down. And kind of looking at it from a trending point of view as well, ratio trend point of view, this explains each of those ratios and trends. So if you're interested in current ratios and receivable turnover and day sales outstanding and all that, all of that is calculated in that ratio trend tab. But this is where I tried my best to think about, if you had fictitious revenue, you would generally tend to have an increased quick ratio or current ratio because a lot of times they'll put it into accounts receivable and it'll sit there. They could capitalize it and then it doesn't go there, but that tends to be where they put it. So that's kind of one thought there, and then it kind of follows. All of these follow, but these are not that hard to calculate. A lot of times your budget office, planning and analytic department at the company, if you have such a thing, will do this type of analysis, and you just have to get access to the reports and take a look. But it's pretty easy to kind of look at this, especially by department, by kind of location type, and try to see, are there pockets of risk in our company just based on some of the ratios? I mean, beyond kind of what planning analytics may be looking for, here in audit, we're kind of taking a look at it as well. And again, these were just some of the things that you might want to look for, at a high level. I tried to pull them out into one slide so you could kind of see that. As to lots of reports, this is a research paper I wrote for the IIA. You can get it there, but it talks about a lot more reports than I'll talk about today. But I wanted to note there are other lists of reports out there, and happy to point you to things if you want to email me too. The thing that we learned, though, from WorldCom and looking in all of these types of general ledger audits was, and I think WorldCom really was a huge push, or at least Enron was, for SAS 99. But we learned a lot from it, and I think a lot of that went into SAS 99 and into the following standards that came after that. It started with a whistleblowing tip, so they waited until it was 3 times as big and twice as long of a fraud, and looking back at the studies, if you think about it, and there really wasn't a whole lot of support for journal entries, which in looking, I'm sure, at the data as well, it might have been a blank journal entry or something odd. They had to look through lots of journal entries to do it as well. What SAS 99, it was a big turning point, at least at external audit firms from people that I've talked to, that was the point where they really had to start getting serious about fraud and start running at least journal entry and general ledger testing. And analytics became a big thing, so running reports. And the AICPA even put out a practice alert 2003-02. I didn't include it in our files because I'm not sure if I'm allowed to and such, but you can download it from the web freely, and it's the practice alert 2003-02. And this explained a variety of tests that I believe, it was back in June of 2003, but it was a variety of reports that I think most external audit departments are running today in their day-to-day, because it's in this. It's not a standard; it's a practice alert, but it's kind of close to a standard because it's in a practice alert. So there were other documents that came out after this on general ledger testing. I'm just trying to point you at some of the key ones. But before we do that, let me point you to our polling question. And the first one being, who has involvement in close to 90% of all financial statement fraud? Is it internal audit, the CEO or CFO, account manager, or the COO? And for NASBA rules, we just have to do these questions. We try to keep it open for about 90 seconds or so, and if you can respond in that time frame, we appreciate it. Most of you are getting there in voting, so we appreciate that. This is a great time to ask questions if you have any. I'm starting off general, just to give you the background. And the next section, we're going to talk about reporting objectives and getting into all the different types of reports and ways that you should be thinking about it from an analysis point of view. But with that, 90% of you have voted. If you have any questions, let me know, and we'll just take a break here for another 30 or so seconds. And I still see about 90% have voted. Maybe a few of you may not be able to vote or not seeing it, but what I'll do is I am just going to keep that open for another few seconds. I don't see any questions. 95% of you voted. I'll keep it for another second or two. And just if you don't mind getting it in the 90 seconds, we appreciate it. Also note too, if people want to quickly run for a break at some of these points. I know it's only a couple of minutes, but we try. Let me close that poll, share it with everybody. And CEO and CFO or CFO, CEO or CFO is correct. Let me hide that. And get into our setting reporting objectives. So, in query viewpoints, I believe that we can get to a lot of the different report objectives that we want to get to in the way of looking at our analytics. But I think it kind of gets to looking at things from a direct control and control circumvention point of view. I mean, management override is the main reason for doing journal entry reviews, I find, in most cases. But it doesn't have to be the only thing. I mean, I think you could do a lot more. So looking at like control circumvention is one good thing. But I think even just looking at direct control, and then also from a data mining perspective, just to understand what's in there. And that can give you a lot of perspective from a risk assessment point of view. So, there are a lot of, I want to say, report objectives beyond just let's get this audit done for external audit and, get the SOX testing done or what have you. I think there are a lot of other ways of kind of learning about your data. So there's this who, what, when, where, why. I go through this, in many of the courses just to kind of explain. It does the best job I can find of explaining a situation, so that if you are trying to tell a story about your data and try to tell a story about the general ledger for a given division or business unit or what have you, the who, what, when, where, why helps. To know, this many journal entries are being posted by whom, and errors are being posted, when and by whom, and etc. So, I think this is all good for analysis and also for risk assessment and for fraud testing too. So getting into more of the specific reports, though, I mean, not, just making it more of a summary, but getting to some specific reports, I find the analysis of who, what, when, where, why, the who is the most important one. Understanding because they tend to commit the fraud the most, not computers. Computers sometimes glitch, but people tend to do the most. And taking a look at who's authorized in the system is a great test of direct control. So just saying, are they authorized? Taking a look at title, department, and analyzing, even though they're authorized, does it make sense, that they're posting this much money when, for example, they're not, very, very high up in the organization from an approval limit point of view. It just seems odd, and they may have a lot of low dollar postings, that are adding up. But again, taking a look at trending by transactional score, this is an ending concept, but I wanted to note it now, that you can run a lot of reports and create a score for those reports. So every journal entry could be scored, and then you could trend on that. That transactional score could be something that you're ending up reporting on and trying to extract things out on. And all of this is done by this who perspective of, summarizing it by the who entered that journal entry. From a what perspective, we will be looking at kind of number and digit patterns and textual analytic and stratifying and, all these kind of great ways of looking at data. And I find the what perspective does give you probably the most information around the situation and understanding, from a process point of view, is it above average? We can pull those out, and that is a specific test, let's just say, but it is kind of based on this sort of trending and averaging. Textual analytics, we might want to look for new words that are showing up, and that is a bit of a report, but it's based on a trending. Let me just continue on here. The other thing I wanted to note, though, is in looking at the data, I really like to, in the what category especially, I really like to understand the type of expenses that are being posted to from an AP point of view, from a payroll point of view, from a healthcare point of view, because you really can understand where there are profit opportunities within the company, and applying a lot of approaches around cost recovery. At a minimum, just taking a look at vendors that have a high opportunity for cost recovery would be something to kind of focus on. Now, what I tend to do here, and I didn't provide the data file for it, but we'll just kind of talk it through for today, is I tend to get the accounts payable expenses, and I find, even though we're talking about general ledger, if we're trying to look for money here, accounts payable fraud accounts for almost, a lot of the distribution fraud. I won't say that it's all of it, but especially if your travel and entertainment is posted into accounts payable, it has most of the data that would lead to misappropriation of assets. So remember, this is cost recovery from a misappropriation of asset point of view and stopping that. but also, we can do it from a financial statement fraud point of view. But by getting these expenses for analysis, be it, SG&A or wherever it's going, cost of goods sold, we can take a look at the general ledger, kind of take a look at what's being posted from the AP system, and then try to understand a lot about that spend. And like I said, a lot of the data, I'm just going to give you a small example of some data here to show you on the screen. A lot of the data gives you not only like in the general ledger, it gives you like vendor number, vendor name, things like that. So you can actually align off of that to understand how many vendors do I have in a given account, or how many types of accounts do I have where I only have one vendor and I have a huge amount of money. So I almost have like a risk. A great example once that was told to me is that there was sort of a videotape that was being used, and it was only bought by one company, and one vendor provided it. And once that vendor was kind of hit by a tsunami, they were not able to provide that videotape, and many people were just not able to kind of do video recording for a while, or had to buy new cameras. And it's something like that where you could kind of get into that situation where you're buying like one part, and this would be something where you'd easily find it. It could also be fraud, if it's being posted to a suspense account and it's one vendor and it's a lot of money. That's really weird, and you need to look at that. And all of this comes out of the general ledger. It's cost recovery of looking for kind of healthcare spend and telecom spend and freight spend, fraud detection from a misappropriation of asset point of view. And of course, kind of getting into probably more of the fraud testing, which is this specific journal entry and other ledger analytics. So I will start to kind of get into some data files in a second, but I just wanted to talk through, some of the reports. From a high level, we'll be running a lot of these reports today, and some of which, I want to say I kind of talk through a little quicker because it's hard to get through it in the 2 hours. But some of it is we go through in detail. So and we have other courses on things like pivot tables and such, visualizing data, etc. So there are other webinars we have to kind of go into more deeper points. The key here is we're going to focus on as much as I can the general ledger and how this analysis relates to the general ledger. Given that specifically, I like summarizing on who is entering the journal entries, and as we'll talk about in a second, I really like stratifying the value in relation to the who, and then looking at it over time. So it's it's sort of a mouthful, but stratified by person over time. But that will be something that we'll show you very quickly how to do, and that gets to the what, because you're starting to understand the size of journal entries. But we're going to talk also about kind of finding unique and repetitive journal entries later. It's a little bit later, but even just extracting out manual journal entries versus automated and understanding why, forgetting the fraud aspect. Just why do we have so many manual journal entries? Taking a look at the amount field, I find looking for new amounts in your data can be a very revealing thing, and we'll talk about how to find that. And and that's more of a report, kind of doing a Benford analysis and saying, what's off to Benford's is very useful. But I think even just looking for amounts that have never been posted before that now are appearing and appearing in mass, we should be looking for. That's more of an exception report, in my opinion. Scattergraphing data, as we talk later, this morning or maybe afternoon, depending, gets into visualizing data, and I think the scattergraph can very quickly pinpoint value and volume change that you might not be able to see because it's kind of coding the the XY of that transaction much better versus just having like one axis in the graph. You have two axes in the graph, and the scatter is really good for that. So I'm just going to continue just through a slide here, and we'll just kind of quickly continue on here for a second. And in getting through kind of the when, we'll talk about looking at weekends and holidays and over time frames. I like to look at things maybe by week, the week number. By week, especially in journal entries, really allows you to understand, how are people posting in accounting? In the first week of the month, they're probably posting a ton of stuff to make up for last month, and then, a week later, they're posting a little bit more. But that third week, must be pretty quiet, and then the fourth week, it starts to gear up again. But you can kind of get a trend of that 1 to 4, or whatever it is in the week numbers in a given month, and I find that can be, useful for analysis as well. Taking a look, I believe one of the best reports, I say it all the time, summarizing by day in the general ledger has found a fraud, in some of one of the audits I did, and I'm sure a lot of others, because it tends to find that one day that jumps out that, looks strange in relation to all other days and allows you to quickly see, that change. So, if there's one report to run, that's a good one to note. Looking at one thing that a lot of companies don't do is think about in the past where they had some issues in the accounting from a suspense point of view, or they may have had an audit finding in a particular area, and just tracking that, like the problem or complex accounts, and then taking a look at the data with that in mind is a great thing to know. And I find maybe each year people kind of put it in the box and say, don't want to open that till next year, kind of thing. But okay, so on the why perspective, I generally look for weird stuff, like really, is it a keyword text kind of match, which we'll talk about, journal entries that don't net to zero, and various other, above average and kind of odd looking round multiples and things like that. Now, taking a look at the general ledger data, a general ledger file is generally set up with journal entry numbers and account numbers in more of a vertical fashion, and you have debits, credit amounts, and total amounts as well. And what I've done is I've added other fields like the round and first digit and first two digits in order to try to code some of the data, and we'll talk more about that later, but yet, for now I wanted to just kind of note that using if statements and functions. So, the data is more, there's not that many fields. I mean, it's almost like 7 or 8 fields, date, journal entry amount, journal entry number, general ledger, account number. These are all standard fields. It's nothing that dramatic. And then only about 7 of them. The enterer field is really important as well. Then what I did was I added a kind of code fields like the first 2 digits and first digit, as well as a stratification. So, this provided us, a file that we can then pivot table, and also kind of look at it from many perspectives. So we have a way of setting up a pivot table by going to Insert Pivot Table, and that should select all of the data. We do have other courses on setting up pivot tables, but we're going to select journal entry number, debit, and credit amount, and it generally puts things in the right places, but you can also click and drag fields into the right place, as needed. But by doing that, that gives you kind of an ability to also look for differences within the debits and credits. And there's a lot of ways to do it, but one of the ways you could do it is to set up a field within the general ledger data, just debit minus credit. But the other thing you could do is to actually create it in the pivot table. Pivot Table Tools has everything. Just go up there, options, design options. You can then insert a new field, and inserting a new field is sort of in the middle there, calculated field. Click on that. You can then go debit minus credit, and obtain a difference column. You could have called it anything. I called it sum of field, and it's a difference. But as you scroll down, you'll see the differences. They're kind of small with one exception, and that's sort of towards the bottom here. And you can filter on these things. You could filter, I guess, by journal entry number, but probably the best thing to do would be to filter more on that, sum field way. One way to do it is to sort it in a sorted descending or ascending fashion, which I done there, and by doing so, that allows you see that sum of field 1 descending, and that's just by clicking on the filter. That allows you to kind of get to these differences. The small differences of pluses are at the top, but look at that big negative one at the bottom there of 998,000, which does jump out at you when you see it. So what we're trying to do here, in the pivot table is not only calculate some useful fields, but also get a sense of where we can kind of drill down on examples of actual deviations and make the pivot table not so much a trending, but an actual exception report. The best way to do that, as we did there, is to double click on the actual difference amount or sum amount, and then that will get you to the actual details. I set all of this stuff up in the file, so it is easy to go get, like that entry amount difference. It's already set up for you, so you could check it out. And it's helpful. That's why we give you the file, so you could play with it afterwards. It's more just-in-time learning when you next do it. Another thing we want to talk about is summarizing from a when category, daily summary. And the when category, in this case, gives you a perspective of looking at when a transaction posted in the general ledger. And, as opposed to what we had before, I'm going to kind of change the pivot table now. Instead of it being on journal entry number, we can do it on the date. And that actual date and value and volume that I have in this daily sum schedule, that's already been set up for you. I'm trying to set these up for you so you could take a look at them versus, being too concerned about how to run pivot tables, where we have other courses, but we're trying our best to kind of show both at once. You could graph the information by pivot charting, as we've discussed and will discuss. But this is one way of just kind of copying and pasting data into a new cell area, like I've done here, and then making a chart, like insert chart. You can put that to a new sheet if you want to. You can also create a dashboard of all these little charts, and these elements are copyable. I mean, you could copy it to, say, an index page where you could have lots of graphs like this that are kind of that are explaining your data. And the graph, though, here is a little plain. In my mind, I find the scatter graph provides more value and volume. The line graph, that we're used to for line type data, like daily data, is good. It's not bad. It's just this gives you this new perspective of volume, value, and once. And you can see on the left-hand side, we even have a logarithmic scale to kind of nicely, distribute the data. You can even put a trend line, which I right-clicked and included that trend line where you could kind of see it there where my mouse is. And the scatter graph does a great job of showing value and volume, as I've said, in one place, and each one of those items there is an account. So it's kind of the how much value and volume by account, and I believe this is like the debit amount field. Now, from a who perspective, I wanted to start looking at the enterer, the person entering the data, as well as the quarter, and looking at it from a time point of view. Now, you can group dates in a pivot table by right-clicking a field and kind of changing that date field to quarter or month or whatever, and it does that. Pivot tables are great for that, changing dates. But there's other ways of doing it, like adding a field. There are various functions we're going to talk about later, like the day and the month and the week number, which I really like a lot, especially for general ledger data. You got to think about it. We work more on weeks than we do on months, and or quarters. quarters, I feel, even, because that first week can be a week where people are doing a lot of activity. Second week, a lot of activity. Third one is usually quiet. Fourth one is maybe gearing up, but it should follow that trend. And the week num function, which we'll talk about in a slide later, it codes the data depending on that date field, which is the one date field I have. It'll give you a week number that you can work towards. And that week number gives you just 1 through 52. There is a way of doing it by month as well, but probably just beyond today. But okay, with that said, in looking at the data, we can now pull a pivot table on week number and enter, but we have to refresh the data. You can't just kind of, pivot tables don't automatically sort of recalc on their own. You have to refresh that data. And by doing so, that field will be entered, and notice the field is not there now. It should be after the date field and before enter. So if I right click it, I can go to pivot table tools, which is at the top, that pink area, but if I click refresh, notice week number has been added. And now we can utilize that week number in looking at the particular data from that perspective. You have to play around with the columns. I have the dates there, so you kind of add the week number. This may not have worked exactly right here, but let's move the fields around. It's thinking about it. Hold on. There we go. With that, let me just make sure we have that week number in there. I think it's unfortunately counting it or something. So let's drag it into that column. As I said, dragging is more of a better way of doing things. So, much better for us to focus on. Okay, so now that we have the week number in there from a quarterly, yearly perspective, the graph looks a little crazy. It's not as good, but even just looking by week number itself and enter, or by quarter and enter, can be useful. So I don't have to have it by year and quarter and etc. as we have it here. But these graphs, the 3D graphs, do a great job of presenting this info. And I think looking at it from a who perspective is one of the best ways to look at things over time. And as we'll talk later, from a stratification point of view, because people tend to post the same dollar amounts over time as well. So, okay, let's look at it by week number, because it's a lot easier to work with. What we were trying to do is kind of get to a year. The years are listed out towards the back here, so if I scroll into this data, what we can kind of see here is we actually have the enters listed out by the back, and we then have the various weeks being represented as well. And actually, it looks like the year may not be, we may have dropped the year in this, so that's fine. Yep, so it's just week number and enter, and that's good enough. I mean, I still think over time it's a lot easier to kind of see those weeks that really jump out in the analysis itself. Okay, to get back to the quarter, which we were talking about before, I'll try my best here to control Z back to this, but what you can do from a date perspective is I can pull date into the analysis. Let's try to do our best here. And we have quarter 1 through 4. And what I can do, with dates are a little interesting. I'm going to right-click this, and I'm going to say ungroup just for a second, and it makes this daily graph, which is kind of a little tough to read, and may even make my Excel think about it, just for a second here. Just give us a second, and in doing that, if I right-click this though and say group now, or if I go up to pivot table tools, another way of doing it is to group that. That's how I got to that quarter and year function that we had before. Notice how week isn't, I like weeks and they don't have it in there, and it'd be nice if it was in there. So that's why I added the week part, but you have everything else, in that. So if you right click and just go to group, if I haven't said it before, the pivot table tools has everything. So between, one of these, you should be able to find everything you need. And one other thing I didn't show how to do in this, but I'll just note it, is if you, I think if you right click on this data, and say value field settings, you can say show value, percentage as percentage of grand total. You can do it in a variety of fashions here, but I wanted to give you some other ideas of showing it more in a percentage format, because sometimes it like normalizes the data a little bit better. And this is that quarterly graph, which again is, this is nice too. It's Q4, it's this person. But I just found the week number one really kind of pinpointed a lot better where to look. If there is a particular quarter and a particular person that you're interested in, you could just go to that person, in that quarter. We'll just, highlight here just for a second here. We have KD in 2012 Q3. KD Q3 2012, if I got that right, and double clicking, you can get down to the actual data for that particular person and for that time frame. And this is something that you can even build another pivot table on, and now you're just kind of analyzing the results of that particular analysis. Okay, so just kind of rounding out, the various things that we've looked at. We've looked at from a why perspective, a who perspective, a when perspective, and I wanted to kind of touch on a couple of what perspectives, and this first one being the amount. I think the first thing that I find is in just by summarizing on the amount can be very useful. And all I did to do this, I just show this to you in the interest of time, is I took the debit amount field and I dragged it into the row label. You can do the same thing for credit and do it separately. Like I would probably do it in a separate report, but do it for credit amount too. And I then drag the this into this field, the debit amount again, but I did it as the count. And the way to change it from the sum to the count is to go to right click on that field, click on value field settings, and to select that particular count. And again, that'll duplicate what's there, but at least you can kind of see how we built that. By summarizing on amount, what I like about this, there are a couple of different, there's a lot of things we could do here, but some of the things from a Benford's Law perspective, looking at kind of digit patterns and number patterns, I like to sort things though, first off, just by the count. How many times did certain things show up? And, 0 showing up happens a lot in the general ledger in a field because the other side, credit, might have been posted to, so the debit side isn't being posted to. But then from other perspectives, like $2,000 being posted 46 times, kind of odd, and something to look for. Now, this is transactional amounts. I mean, you might want to even look at the journal entry amounts, which, a way of doing that is to kind of summarize on journal entry, which is what we did back here, and then, doing a pivot table of this pivot table. So I'm just, trying not to complicate things, but I just want to note, some of these things that you can do. That journal entry amount sum over here, that will, that is what that does. So if you want to check that out on your own, feel free. But this gives you a really nice perspective. I like to look for round dollar amounts that are happening a lot. These are okay. These aren't huge numbers, but it's still kind of interesting to look for. Well, the other thing that's interesting, and just kind of pulling the date field into here, and in the date field, sorry, this is just taking a second here. It must be, I don't know if it's doing it by day. Hopefully not. It should be grouping it by quarter and year. And this may even be where like week number can help. But what I wanted to kind of show is the amount over time, the quarter and year, because it's something where you could kind of see it trending at times and having a spike in a given quarter. And I like the week number again, as I said, because it allows you to kind of, let me just kind of cancel this, sorry folks. And what I'll do is I'll right click this. It allows you to really understand, just even on a week level, if in a particular end of quarter, if a lot of things are happening. So let me just select this field. I'm going to group that selection by quarter. I might even do it by year, just to kind of look at it by year here. And this gives a nice perspective that, we had 39 postings of $2,000 in 2013, 5 of them here, 2 of them there. Now, that's interesting. I mean, that's something to look for. And then we have 39 here. and 4 and 1. So, are these connected? I mean, it's this kind of analysis that needs to be done afterwards that you run this. But I just think the trending over time can be useful. I know we'll talk about this later, but you can then click pivot chart at this point. And probably, I like some of the 3D graphs. Maybe it's a little confusing, but this should provide you a pretty detailed one because we have a lot of amounts here. So, but again, that will provide you that analysis. If you don't like this type of analysis, you can always filter things down, and this gets to the reporting side of things. You can always just kind of look at maybe these top 20 and analyze it over time. And just by graphing the top 20, sometimes it's amazing just looking at things that pop out. So, okay. Again, hopefully, I'm just going to check the questions just to kind of check if we're. And yeah, it looks like I just lost sound. Hopefully, I've been able to kind of catch back on some of the sound aspects of things. I'm just going to continue a couple more seconds here into some slides, and I wanted to talk about each perspective a good amount, or just give you some good examples, but then really kind of jump into this concept that one of the key things that we can be doing is coding our data. And by coding data, we're able to very quickly understand trends within that data, but to do so in a more broader fashion. I like to look at things by location type. Is it a retail store? Is it a warehouse? That kind of thing, as opposed to the actual location. And looking at things from a revenue point of view, from etc. So one of the things that I wanted to show you in coding data, we did talk about the week number, so that was one of them. But another thing that we can do is add the round dollar. And while I have a relatively complex, function here that's being listed, I also, bear with me, have over here a way of just kind of calculating it. And we use the mod function to do round number type calculations. And we're basically going to mod function on this amount divided by, I'm going to go 1,000. I forget what I used in my item there. But notice here, I'm just going to drag down to just there, okay? Notice how it basically divides it by 1,000 and gives me the remainder. So that's the mod function, and that calculates for round numbers. What this does over here is say, well, if it equals 0, if this was 5,000, it will equal 0, and hence it's round. This just kind of looks for whether or not this amount is 0. So, what you need to do is basically filter this field. What I tend to do, if I'm kind of looking at the total amount, I think let me just make sure I'm looking at the right field. Here you go. If looking at the total amount, you want to take out all the zeros, first. And then that would allow you to kind of very quickly get to the point of what's round and not round without having to do this if statement. But I wanted to give you the if statement as well as a way of just calculating in one shot. But it's a little more complex, so I don't want to. I think the easiest way to do it is have the mod function divide by 1,000, and then just give you the remainder. And then you could just look for zeros, but make sure that you also filter the total amount for any zeros. Okay, with that, let us get into our next polling question. What is the function used to test for round dollars in amounts? Is it the left function, the mod function, the trim function, or the round function? All right, so we are looking at the questions. I don't see anything really coming in. And do apologize. I guess if you'd like, we can go back. I didn't realize we were out of sound from 10:39 to 10:47. It looks like at 10:45 people said we were okay. So maybe it's just 10:39 to 10:45. In attempting to go back for that, I could just to kind of go back here. I know we were talking through, clicking through some of the slides. But I think in talking through some of the reports, I tried my best to explain each of the reports, and kind of showing them to you, but from mostly the perspective that we're trying to get to this who, what, when, where, and why, and that is the overall perspective of our data. And in coding the data as well, what I've tried to do is kind of code some of those fields, which a lot of it is coded for you in the pivot tables. Again, all of that stuff that we just went through for those minutes were coded. And with that, let me, most of you have voted here, so if you do want to keep voting here, but what I will do when we come back is I'll just kind of quickly go into a pivot table and just make sure we can do that. But what I'll do is I'll do that for a new example, but we will kind of go through a pivot table again in case you didn't hear how to do that. I think that's critical because once you can build one, all of the other examples really line up nicely. Kept that open for a couple minutes here. Let me keep that going, and I will share that. It looks like the mod function is the one that everyone picked, and you're correct. That is what sets up round dollars. And let me just kind of hide that and get back to our screen here. So, I believe, from a timing point of view of where we kind of cut off, if anyone wants to note in the questions anything they'd like me to go back over, at least at the end of the conference or even now, we can kind of start doing that. But what I wanted to do in talking about coding the general ledger is we're going to kind of talk through a pivot table, and in doing so, be able to kind of make sure that you understand that concept. We did go through kind of a lot of these reports already, and in the coding part, I wanted to talk about stratifications because I think that is one of the top areas of concern. Okay, with that said, we're going to kind of show you, I think in a good way now that I think about it, I can show you the stratification, which will code it, but then we'll also pivot table on it, and that will also kind of get us through the pivot table. So again, sorry about that, but hopefully most of you can see that. Okay, with that, stratification types can happen by value, which is what I like to do. But in the other fields, I like to look by month, by department, by business partner, account, etc. And, I find from a coding perspective, we need to kind of code all these different field types. And these are some of the functions that are useful. I'm not going to use them all today, don't worry, but I thought that it might be useful for you as you're kind of pulling out things or dropping in things that some of these may be useful for you. Again, don't want to, we'll be using a couple of these as we go through it, but this is more probably for your purposes going forward than anything else of something that we're going to kind of spend a lot of time with. From a concatenate point of view, I do find that's very useful, and I want to note that is just putting two fields together to do a bit of a join. The repeat and some of these other clean kind of things may not be as useful, but can be. I mean, the clean function, for example, it can remove like alt characters, like if people do like an alt enter, and it puts things to another line, that can also kind of be handled. From a math function point of view, this is very, I find this can be very useful, and we'll talk about this in a scoring perspective in a few minutes. But for now, we talked about the mod function. There is that round function where you can round numbers if you'd like to. But the Benford law analysis and the absolute value, I wanted to kind of jump into just to kind of show you that quickly and show you kind of Benford law and stratification. And it should round out a lot of what we just talked about a few minutes ago in another type of example. So that'll be what we do. From a timing point of view, I know we've talked about this. The weak num was one, but there's all these other ones. ones like day and minute, and the one that I liked the most that I noted was you can actually kind of get like a start and a finish date that you put in there. Gosh, it could be check date and invoice date, and it'll give you the number of working days between those time frames. So in this case, it might be like enter date and application date or something from a journal entry point of view. But it's interesting to see like the difference in actual working days between dates, and that's a function as well. It's a little more complicated, but I'm just noting it. We talked about week number in before, and that will calculate a week number for analysis. I was then showing you that example of the number ranking, which I know people were hearing that part of it. Thankfully, is that aspect of it. What I find is probably one of the quickest ways to find some fraud, because you can find somebody who's posting a repetitive amount over and over. I'm not an expert on the MCI fraud, but I will say that they did have a variety of repetitive entries, and I would assume a lot of those had the same amounts, because it's habitual to do that kind of thing. So with that in sort of our mind here, what I wanted to do is go back into the data, do a little bit of coding and stratification and Benford law, and kind of put it together into a bit of a pivot table for you. Okay, so looking at the general ledger data here, what we have over to the right here is kind of a first digit, first two digit, etc. Now, again, I give you some of these complicated formulas because they're from other programs where we go into more depth on like statistics and visualizations and such. But this particular formula, very simply, is more of a left function. So the left function allows you to kind of pull out of a particular field the first digit or first two digits. And that left function, we'll just kind of add that here just to be kind of quick and simple here. Not lefty, but left. And just going over to this amount field and picking, say, the first character, it'll pick a 1, and so on and so forth down the list here. But I do it a little more complicated here just because it actually does a better job doing it this way, and this is from some of Mark Negrini's work and learning from him. Okay, we talked about the week number as well, but I think having that digit part is key. The second thing that I want to talk about is a stratification, and what I did was I put on another tab in our data, a lookup table, and a lot of times you have this like account description, and it's in a different table or whatever. And what I can do is I can align using VLOOKUP, and let me just kind of show you what I'm doing here. I'm VLOOKUPing to that amount field, the E2, and by doing so, I'm able to then look up to this stratification over here, and that's looking up to this values here. And then what I'm doing is I'm saying pull the second column based on that amount, but use the true position. So let me kind of show it to you in this format, so just so you get a better perspective now. I'm looking at that one amount value, 158. I'm looking at that range that's in that other tab. I'm pulling over the second column if it exists, and it's true, not false. A lot of times when you're doing VLOOKUP, you use false, not true. But in this case, the true, it leads to like a fuzzy matching. And if you follow the format that we have here in the way that you set up the limits, basically to be the limit. So if this is 0 and under, you put 0 here, and so on and so forth. This gives you a bit of a way of very quickly stratifying your data. Now you can pivot table on that and get kind of a lot more information very quickly. So let us go back to our testing pivot table that we had here. And I think what I may even do is just kind of start over and just completely get back here to here. And I'm just going to select that first digit, and I'm going to put it into the row labels for right now. And I'm going to, bear with me, just put that into the row labels. And then what we'll do is in the stratification, which is down at the bottom here, we're going to put that into the columns. And this should allow us, it kind of goes 0 to 5, 0 to 9 here. And what you can do is start to look for a count within these fields. I like looking at counts of things for digital analysis because it kind of gets away from the amount. If you summarize, it tends to sometimes cloud your analysis. Like I'm looking for more volume and changes in volume over time. And just, I mean, kind of, well, right now we're just kind of looking at it on a stratification point of view. But one of the things that you can do is start to consider adding, say, that week number, which I think we had in here at some point. Maybe I've got rid of it. Or other field that, let me just refresh this if somehow that didn't pull through. Yeah. And what we could also do is kind of bring in the week number into that analysis as well. And by now, I'm kind of looking at it from all these different perspectives, from the week number, from the stratification, and from a digit pattern point of view. And by scrolling through this, I know it I'm just going to scroll out of it so you can see it a little bit. It's not that big. I mean, it's just something that you can almost eyeball and see some of the large changes as you look at things. But what this gives you, I think a good perspective on is within given weeks, how things are kind of stacking up, and then looking at that over time. Best way to do that again is to kind of chart it. So I tend to go to a 3D chart, and if I have too many data sets, I may have to change things, but and change things around in the chart itself. But with that, this multi-perspective analysis is something that I find can be very, very useful. So let me just remove that. What we can do to quickly fix this is I can pull the stratification and the week number into the rows and put the digit into the columns. I was kind of debating that before anyway. And we'll just kind of put the week number here first. So actually, put the stratification first. So this gives you a perspective now of by week number of when in 0 and under applications were made. Up to 100 things were made, but let's kind of go to the, maybe over 10,000 because that's most interesting. So over $10,000, given the digit pattern, where do we have the most activity from a particular week point of view in a digit? So again, in week 1, we tend to have like most of our large activity and look most of these numbers, but this is a way of, I hope to kind of show you how you can very quickly pull out deviations. And I'm trying to use a multi-perspective approach based on the coding. So you're not only coding like on round numbers, but you're coding on stratifications and round numbers and a variety of things in there. Okay, so in continuing onward in the in our analysis here, I wanted to move into something called unique and repetitive account sequencing, and it kind of gets us into a little bit more of a more complex area, but hopefully in what we've been doing today. We've been able to kind of go through most of this. I think one thing I said I wanted to do is just show you how to do a pivot table. So let me just say, if I didn't show you this, I'm going to say insert pivot table, and you would highlight all that data, and that was giving you kind of that range that we were using in order to kind of calculate the values and volumes. So again, just trying to hopefully back up there a little bit on the few missing minutes, and also to kind of move forward into something new. The new other file that we had was something called Journal Detail Ready to Run, and it's a very large data file. It's something where we've been able to kind of look into. I guess it's a lot of data. So, and I did this in order to be able to kind of make sense of it for our purposes. It is a bit self-working using the data that you have, although, and I find, I find in looking at the actual journal entry numbers, I guess what I want to do here is kind of look at journal entry number and account and look for kind of repetitive sequences along those lines. I find, in one of the key tests out there is kind of looking for unique journal entries, but it's very difficult to see how unique journal entries can show up in the data. I guess I know my audio seems to be cutting out, although I don't know what I'm doing. I mean, there's no kind of hitting of the mute button or something. I don't know if yeah, I apologize. I don't know exactly why, and I know we are recording it, so it should be collecting that. Although, again, for some of you that I know noting on the questions, I don't want to make you feel like you're not being heard. I for some reason I'm not being heard, but I seem to have a good the audience view is 100%, and I don't have anything kind of running in the background or anything like that would impact it right now, so I'm a little confused. Sorry about that. We are taping it, and the taping should be crystal clear, at least the one that I'm making, but also, hopefully up on GoToWebinar as well. In going into the general ledger repetitive and unique testing, for those that can hear, because I do note we have this issue, the focus of what I did was to first start off encoding the data from a line perspective and also a journal entry perspective. And what I did in our analysis is I first summarize on the journal entry itself, but my goal here is to identify how many times do I have how many times do I have journal entries, how many counts do I have for each journal entry. The main thing, though, that I do want to focus on is kind of the sum of credits. And what I tried to do here is taking the journal detail. We took each journal entry and I tried to focus on only the credit amounts. So I kind of filtered out only the credit amounts from here. And, in doing so, that was then copied into here. And I coded the data, which is in your file. Again, this is a little more advanced, but I wanted to show you how it's done. We then code the line of that, as well as whether or not it's a C or a 1. And then we have kind of the bottom 10 that are calculated, which is, I had to, there are a variety of ways you could do this, but I think the easiest way to do it is just to highlight here, once you've calculated this field, and basically deselect items. So, in this case, we could just kind of take out 11, 12, 13, 14, etc., and just get to C1 to C10. Now, C1 to C10, let me just show you what that means. For this given journal entry, we may have 2 credit entries. So we have 2 lines that are related to the credit entry or this journal entry 1000, C1 and C2. So by kind of pulling out the bottom 10, C1 through C10, I was able to get the credits and the debits. And the debits I did separately. I kind of, just going back here, we had the journal detail. And then we have kind of the journal detail here. So I guess what we've been able to do in analyzing this is I've been able to code up whether or not the item is a particular line item, D1 through D10, and I then put all of that together from a C1 and D1 through D10. So if you look at all of these now that I've been able to summarize and copy and paste out, we basically have only kind of C1 through C10 and D1 through D10. If I pivot table this, so if you kind of follow this schedule through from the left to the right, you can get to this ending analysis here where I can pivot table on that entire pivot table on that entire set of accounts, where I can have all of the lines from C1 to C10 by journal entry number. Now, I want to kind of scroll out here so you can see this. We have kind of C1 through C10 and D1 through D10, and in looking at this, what you can see is that each journal entry is now reduced to one line item. So journal entry 1, which used to be a debit posting and a credit posting, is now just one line item in essence. So in kind of getting all of this put together here, what this allows you to do, if you can then summarize on this file, is you end up getting to this final table here. Let me just kind of get over to here as you follow it through, of which journal entries end up having a unique or a repetitive pattern. So, is the journal entry happening where you have a debit to one account and a credit to another account in that particular case? Or, in this case, if I look at all individual entries, so entries that only happen once in that data based on the debits and credits that are being posted. So this is something what I'm really doing here is I'm taking data that's vertical and I'm turning it into a horizontal data pattern, which is happening over here. And once I have it in a horizontal data pattern, I'm able to do quite a bit with in summarizing and figuring out unique and repetitive patterns. Okay, so I guess with that said, I know many of you are hopefully hearing me still. I know a few people are still kind of signing in, noting some sound qualities here and there, but again, hopefully you can hear what's going on. In the red flag word searching, which is, as we get back to the slides here, another key topic I wanted to kind of get through and give you some perspective on. Been doing a lot in this area to understand process flows, and especially in the general ledger, because it's the lifeblood of the company. So you can really understand the entire business process by just looking at that GL data. And I find too, similar to Benford's law that we just talked about and did a excuse me, a bit of an amount summary on, I think you can do the same from a textual analytic point of view and gain this perspective, but it's again from more of a process level now as opposed to just the dollar amounts. You can start to see if certain entries like accrual entries, cost accrual entries at year end, or fixed asset entries during the quarters are happening. And a lot of this, again, just from the text. Things like we talked about, the new numbers that are showing up, things that are showing up that lots more patterns, let's say in the number 1 or number 2. The same thing can be said for words, words that are showing up in more pattern now versus before is definitely a key focus area. Some of the lessons learned from WorldCom were the words line costs and corporate unallocated revenue accounts were key, and things that people were searching for when looking at those journal entries. And we have a variety of keywords that you can look for. There are some rules now around FCPA rules, especially around doing types of keyword searching and how that can be really effective in fighting corruption. And very similarly, I think you could do a similar thing in financial statement analysis and look at keywords like increase and decrease and such, just to see the relevance of how much do you have of them, and are they increasing or are they decreasing over time. But let's get into the next polling question. And that is, what key phrase would have been useful to search for in the MCI fraud? Is it increase revenue, line costs, decrease expenses, or cell tower? Doing keyword searching is really just looking through data files and looking for a particular word list. And there are some macros out there that can help you. There are some products out there that definitely textual analytic type products that can help you as well. And I guess what I'm kind of finding is that there is this pattern to data, and that's what's so interesting about letter and word analytics. And just trying to give you a more simple test that you could be working on here. One of the things that you could be doing just in your general ledger sample detail data, and I don't want to say I don't have an example of this. We kind of have an example, but one of the things, if you had a description field, even just taking the first letter of that description field, like we talked about the left function before, and just kind of doing something like that, that will take that first letter. And first letter analytics can be very, very useful as well. I mean, this is all just going to be N or R, so it's not really that useful. But if you're looking at like a journal entry description, that first field, you can gain a great perspective there in just kind of looking at some of the top journal entries that are being posted. But I find from a keyword point of view, another way of doing it is just kind of a VLOOKUP to your data. And one thing that just to kind of quickly show you here, excuse me, let me just try to get over to something a little bit more useful here. If we just kind of gravitated over to here for a second. If in looking at kind of this first letter of that particular field here, hopefully I got that right, is we can build a pivot table off of that field, as we said, and just trying to getting a sense over time. I will just kind of insert that pivot table like we've been doing before. And once again, I feel like you have to refresh every now and then, just as a note. But you can easily do this, let's say by week number, and kind of look at the count of over time by person and that first letter. But if this was the journal entry description, again, this can give you an interesting perspective, especially if you pivot chart this. As we've done here. And I wanted to kind of show you, the keyword searching, which can be done via VLOOKUP, and we talk about in a variety of our textual analytic type courses, and I had that slide there. It's interesting, but I find, this can be even more interesting to just take the first few words or a few words and first word, maybe second word, if you could find it in the data, and just kind of look at those patterns over time, because there's these large spikes that occur, and in a given week number, and those may be the times that that you should be kind of looking at it. Okay, so kind of moving onward from some of the textual analytic work, I wanted to summarize and also provide some thoughts on a graphing perspective. And one of the charts that one of the graphs that we talk about quite a bit is the scatter graph, and I wanted to go over. We sort of started on it before, and maybe this is in the beginning when things changed from a vocal point of view. But in looking at this data, I have a lot of information in here from like quarter and year and other perspectives. But one thing that you might want to do is just take a look at like a count number, and to kind of take out from this anything but maybe the year, so that you just have year. And I might even just take out everything but the amount and the count. So I have that for the amount and the count. And then the last thing that I might do is just kind of filter out and only look at like 2 years of data. So what I've quickly done here by filtering on a couple of years, by graphing it by account number, and looking at it in more of a crosstab kind of way, you can start to look at, let me just highlight this for a second. In 2013, we had $334,000, which was associated with account number one, and $106 million, associated with that account number one in 2014. From an entries point of view, it went from 38 to 172. I mean, this is a lot of data to process as a person, looking at it by account and all of that. But if you copy this data and put it into its own little spreadsheet, I think we put it over here. Hold on one second. Whoops. Putting it in its own spreadsheet, by doing so and having kind of the value and volume here, or the value and volume difference here, the actual difference between let me just go back to here, the difference between these two, you can create some very interesting charts or scatter graphs, and I more or less I wanted to do that with you as an example so you can see that in detail. But I do find the general ledger account number one is great. To do it by location or location type is great. So the location type would be in column A, and then you'd have this kind of year analysis. But let me just kind of very quickly recreate what we've been doing in this other schedule, this scatter schedule here. Let me go over to. I'm going to create my own kind of worksheet for it because I think it kind of deserves it. So we'll just go over here and say insert worksheet, and I'm going to paste special values so that I can get the values in there. And if I remember correctly, we had 2013, 2014, and then this was the value, and that was the volume. So, looking at it from a value difference, we would take 14 minus 13, and then from a volume, we would take 14 minus 13. We can copy that down by double-clicking. We can put values here and make things look a little bit prettier. But this is basically change, and this would be value, and this would be change, and this is volume. Okay, just kind of, one last thing. I then highlight all of this data, just the change, and I can then insert a scatter graph, just like that, and I can move it to its own chart, just like that, and this gives me a scatter difference. Now, there are a few a few pockets of information that are really kind of throwing the graph, like the 500s up here. So let me go back, just for purposes of our, charting exercise today, just go back to this one here, and I'm going to filter up above. So I just put a filter on the data, and I'm going to say, I really don't care about the 600 and the 500 right now because it's sort of hurting the graph. And this allows you to kind of now drill in, and I may even want to drop the 100. So let me just drop the 100 just out of, getting some of these large ones out of the way, and head back to that chart. So this gives you a perspective now of kind of large dollar value change within, and each one of these bullets is an account. So if you kind of highlight this account here, it's, that change 8.9, I think, million, and 6 in volume. So it's a very low volume, but a huge amount of change. And in looking at this scatter difference, you really can get a sense of high volume activity. Things where there's almost like a decreasing volume activity. But from a value point of view, it doesn't matter. And most of them, the value doesn't matter. As you look at all of this stuff, 451 accounts that are in here, there may only be about 20 of them that you really need to take a look at. So each one of them you can highlight here. We have other graphing ones on scatters, but I find the scatter does the best job of kind of showing that value and volume in one place. So I think that that's like my main reasoning for using it. Now, getting into other scatters, we built one of them here that I wanted to just kind of scroll out on, and I want to go one step further on the scatter and just show you this is. What I did here was I took the daily data, so every one of these items is a day in the year, and I scattered the value and the volume. So, just like we did before, but it's not a difference. It's just a day of spend. And we kind of talked about this before. This data is in the daily sum category over here, so I scattered it. Okay. What I did was I changed my axis to be more of a logarithmic axis. And I just want to show you, this is a non-logarithmic axis, so it's really hard to kind of figure out things. And if I go to logarithmic axis or scale, I can get that to now look a lot better. And it basically pulls it out into 10, 100, 1,000, 10,000, 100,000, etc., so that you're getting up to this point where items that let's say are closer to say 100 million in value for a given day that have only 58 transactions are really strange. I mean, it's actually strange for all transactions. But anyway, hopefully this helps in seeing kind of how scale from a pivot table and scatter chart can be useful, that logarithmic scale. And we set that down here as well. So in the format axis, I also set that logarithmic scale. So you can right click to get to this, but one of the things going back to the slides now, you can right click to get to almost anything in a chart. But I find, just the charting of data, once you've kind of gotten into, oops, sorry, I thought I had a slide for this. I apologize. I thought in this slide here, but in the charting of data back here, you have a chart tools that shows up every time that you have the actual chart show up. And in doing so, you have a design, a layout, and a format. And what you can do is kind of change almost anything in a chart, just like a pivot table, by using these tools. So a lot of times, I fumble around trying to find things or look for a variety of features. But if I'm in a chart, it's all available to you right here. And there are, obviously some ways of making things look very, 3D and pretty and, very, very quickly as well. Okay. Okay. So, continuing onward here, just wanted to go back to the slides here. There are a lot of chart types. I tried to go through them all. I do find the scatter graph is the best for the value volume. We talked about grouping date ranges by kind of right-clicking on them, and also talked about how the scatter graph can be utilized as well. The geo mapping, I'm not sure really falls into the category for general ledger testing, but it is something to consider. I like doing it by location code, which can kind of help quite a bit. There are some features there, but again, let's get into this next polling question here. What chart is best to show value and volume in one place? Is it pivot data, scatter chart, geo map, or line chart? So as you answer that, hopefully sound is going a little bit better. And I'm just setting up on my end here. Last segment we'll be talking about scoring as well, which should be helpful. And most of you voting here, I think I'll just hold this out for just a little bit longer. And just to see if anyone else, but I think most of you have voted in, so thank you for that. And I will close that poll and share it with everybody. And the scatter chart is correct, as we've talked about. So let me hide that. And, just some concluding thoughts on graphing, actually, before getting into scoring. I find just by copying and pasting those graph elements that we were showing before, like the scatter graph or any of it, if you just highlight any of them and copy them to their own page, you can make a dashboard, and the dashboard can give you this one perspective of lots of different things in one place. And I've been using this more and more every day in my analysis, and I find just having more of like almost like an air pilot controller sort of viewpoint of everything is very effective, and just especially if you're looking at things on a weekly or monthly basis, as sometimes I'm doing. Okay, but getting back, final topic here, scoring, and transactional scoring is something that I work with quite a bit, and do feel is a way to get around a lot of false positives. I mean, if you ask kind of why use scoring, it's for that purpose alone. In looking at the scoring example file and just kind of getting into that, our goal here really is to kind of add up these spreadsheets. So each spreadsheet here is a particular report, and we're trying to kind of bring it back to this final one here. And I find, the goal of that is to say, well, we're trying to get a single score for every transaction based on its severity. And we're trying to score things and summarize it like we've been talking about pivot tables by enter, vendor, department, etc. Also like to scattergraph things just to look at things, changes over time. And I think sampling a fair amount of the score, I don't think you should look at only the high scores. I think look at things trending and averaging over time. But what's great about scoring is you're able to really set risk in a mathematical way by actually putting values to it and putting values to reports. What I do is use VLOOKUP, but this time we use the false statement as opposed to the true statement. And I think that we'll show that in a second. But I think that's kind of the key differential between them right now. Okay. In combining the scores, we'll show this to you in a second in Excel, but I wanted to show you, you create a record number or journal entry number or however you want to, kind of align things, but then you use VLOOKUP to do it. We talked about scatter graphing enough. I mean, I wanted to just note you can chart the score, so the score of that particular transaction based on the value and the volume, and really, the value and the score. So now you basically have my value, which is how big is it, the impact, and then I have risk, which is the likelihood being represented, and that's kind of in this particular scatter chart. But let's kind of get into the data, because I want to just show you a couple of things here, and then we'll conclude with a few final slides here. As I said before, the scoring example 051315 was the table that we're using. We had the journal entry number here, and we have the various sheets. Now, the journal entry number is something that is a key field. You could have journal entry, and line number, which would be a more descriptive key field. But again, journal entry number. And what I'm deciding here is, does the item show up on report 1, report 2, etc.? Does it even show up? And I think in looking at the data, what I find is the 0.1 is where it's showing up, and the 0 is where it's not showing up, and we're aligning that using VLOOKUP. So let's kind of look at this VLOOKUP of report 1. We're VLOOKUPing to this particular sheet back here, and VLOOKUPing to the journal entry number. We're looking at I believe here the second column, and pulling in that score. So that's that second column here. And the difference here is we're putting false instead of true, which is, we had true before for stratifications, but this one's false. And in the false statement here, in looking at this range here, what you can kind of see is we've changed the true to false, but the false sets up a specific now, like if it doesn't match perfectly, it won't match. So, in this case, if that journal entry number does not match in report 1, the false statement kind of kicks in, and I believe it goes to, in this case, NA. But in all of our cases, we have values, so it works okay. So I do this for report 1, for report 2, report 3, etc., in aligning all of the schedules together into one final schedule sheet. And that allows me to calculate the score, which is basically, just a summary of all of those VLOOKUP scores that were set to the right. So, 1 goes here, 2 there, lines up, and then we have that score. Once I have that score, and just, we'll kind of go back to the slides here and then just quickly back to here, is what I like is there's something out there, called I'm not again expert statistician, but I will tell you I play with this stuff a lot, and I find that the normal curve, the bell curve, is something that we all feel comfort with, and we understand standard deviations and averages, and really this is how this is lined up, and what we're showing here is this normal curve, and I'm trying to say if it's within a negative or positive 1 standard deviation, then we're looking for things that are within, say, 66% or so of the average, and 95%. And the goal here is we're trying to kind of find the percentile of that score, like where does it kind of fall. And I always like to explain this when you go to the doctor. If you have children, they'll explain to you, your child's height and weight, generally based on their percentiles. So just going to the scoring example, I have this Z-score over here, and it has all these crazy calculations in here and statistics, but I'm going to try to focus you in on just a couple that I think are like the most important. And the key thing I'm trying to get to is the percentile over here, and to say, well, your child, let's say, is 80% weight, or 78% weight, and 94% height, and they're I don't know, very tall, and from a weight point of view, they're keeping their weight down. So that would be how to kind of explain things. And what I like about it, be it from a scoring perspective, or you could almost even do this from just a dollar amount perspective, you can almost get percentiles for for a variety of things, but the amount is even one of the more useful ones, in that you can get a sense of for that particular amount, where is it in the percentiles of our entire transaction amounts? Is it in the 1 percentile range? Or if it's a very, very large score, like the largest of scores that I have here, is it in the 100% range? So what I'm doing is I'm creating a Z-score off of the score field. I'm calculating the percentile, which is over here, and let's just kind of quickly talk about how to do it. This is, again, part of more statistics and some of the more I want to say not the practical courses, but more the functional courses that we've set up for the year. But with that said, in the Z-score formula, what you can do is you can standardize. And that's the standardized function, and I believe we've explained these in the slides as well. Each one of these has been listed. The standardized function allows you to kind of focus on the standard deviation, which is above, and the standard deviation is calculated based on a formula too. And then it's also taking B8, which is the number of observations, and then it's taking, it's taking the score, the number of observations, and the standard deviation. And based on that, it calculates a Z-score. And the Z-score is kind of, it doesn't really make a lot of sense to me, at least. I mean, it's something where it's hard to understand what that means. But with that said, it is something where if you normal distribution, if you do the normal distribution of that percentile cell, you're able to get to a percentile. So the goal here is to kind of calculate standard deviation using the standard deviation formula of that entire field. It could be amount, it could be score, it could be a lot of things. Once you have the standard deviation, which we said we need, we also need the number of observations, which is the count field, using that. And that will, and then obviously the score or amount, and that allows you to get to your Z-score. By getting to your Z-score, you can then get to the percentile using the normal distribution function. But all of it is here. I want to provide this to you because it's not something I even ask you to memorize. I feel like it's better to refer back to some of this, and hopefully this example helps you to kind of see how you can very quickly calculate how much you should be looking at here. Okay, so I want to launch the last polling question here. We're pretty much getting towards the end of the session, and as we're almost getting to the end here, we really just have some closing remarks and such. We are kind of taping this as well, and it should provide a clear recording. Hopefully, I will see, but hopefully. And with that said, I think we have just about 30 more seconds here. I'll hold off on the polling question, but most of you have voted, so I think we're almost done. And if you have any questions, this is a great time as well to kind of post anything. But let me just keep that polling question open just for another 10 seconds or so. And I will close that and share that with everybody. The VLOOKUP is correct, and some of the other functions, not so much from an alignment point of view, from more of a text searching or summarizing point of view. So let me hide that. Kind of get to a final slide or two. Just noting here the score, of course, that we talked about. That score can be summarized in all the different ways that we talked about before, like who and when and stratifying. So, it just gives you a different perspective to look at your data or journal entries from that point of view of how many reports do they show up on. End of the day, I think a lot of this can be put into a data mart. So I had this here, but I think I just wanted to kind of get towards the end of the broadcast here. Do apologize about this sound. We'll be trying to get a clear recording either through the work Jim does in posting the videos, or myself as well, where I should have a clear recording, but we'll see when we're done here. In the data files and video, as we said in the beginning, we do have a link to that here if you didn't get that. I have other data files and such, some of which I showed today that are also available. From a keyword and textual analytic point of view, and just noting, we have some files that are for sale, but we also have a free webinar, and you can get to a lot of the free videos that are out there. There's no CPE for those videos, but auditsoftwarevideos.com provides a great deal of videos. But from a training point of view, we have a lot on the calendar this year, a lot of topics. We go pretty deep into a variety of the audit areas and topics, and offering 13 different courses. Trying also to do it in a very, very inexpensive way for everyone, and many courses can be $100 for 2 CPE, and we're really trying to keep things low cost. Also trying to talk about Excel and how to utilize Excel and from an audit and analytic capability, because it is a great framework to talk from. And as you look at these courses for the next few months here, this gives you some idea of where we're focusing: revenue, big data, textual analytics, where we should have some new concepts there by that time than from another course we'd given earlier in the year that was similar topic. Also talking about kind of how to save money. If we talked about in the general ledger today, and then also to take a look for a variety of accounting packages of getting data. We talked about that. Also, there are some surveys out there that Jim has up on AuditNet, and I think the technology surveys is still out there, and really one of the I would say get in on that one. It's a great one to get in on, because I do find that what we're going to be, what I find is that gives you a lot of perspective of the industry itself and in analytics usage, but especially from a data analytic perspective. I did note before that we have something called Audit Software Videos. Audit Software Videos is free. It's 70 hours of training in ACL, Excel. It's a lot out there for you to take a look at and play with. And we do sell the sample data files, but it is something where you can get a lot for free, and I am pointing people there quite a bit. And I do want to thank you for today.